But what actually caused the market to sell off is they increased their median projection of the Fed funds rate from 3.4% to 3.9%. All right, good afternoon, everyone. So it's end of the month again, and welcome to our monthly market updates for Busy People series. And we will be having our last market update for monthly Busy People series for the year 2024. So in this market update, we'll help you to get up to date with the global stock market while you're having your lunch. I'm Chye, a financial market analyst and coach at Beyond Insights, and this is your express session to get up to date with the stock market. Since we are doing this over lunchtime, we'll keep it to 30 minutes. I will start the timer when we start. We'll cover the market highlights, major stock market indices performance, and also the upcoming potential opportunity and risk out there. So are you guys ready for the last market update of the year? You may type me in the chat if you are ready. Just an important note before we proceed, whatever we share here today are meant for educational purposes only, and facts and the data and facts we share here might change as well. So if there's future development, things may change. And what we want to make sure that you know that we are not a licensed investment advisor. We do not manage customer funds. We are an educational institution, so our purpose here is to educate people so that you can make your own decision and be your own investment manager. That way, you have better control over your decision and be able to get better results. If you are looking for stock tips, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as a recommendation to buy or sell. All right, so I'll start the timer. We'll start now. Okay, let's start with the market highlight first, as usual. So the SPY and QQQ that represent the top 500 stocks in the US, and also QQQ that represent the top 100 tech stock in the US, pull back after the FOMC, after the Fed meeting. And what happened in the Fed meeting? During the Fed meeting, the Fed actually cut the interest rate by 0.25% as expected. But what actually caused the market to sell off is they increased their median projection of the Fed funds rate from 3.4% to 3.9%. So what does it mean is they forecast that next year they will have lesser rate cut. They only have 2 rate cuts in 2025 versus the projection they have in September 2024, which is 4 rate cut in 2025. And the market reacted and dropped around 3% during that day. So let me just quickly show you the chart here. So from here we can see that during the FOMC night, you can see actually the market sell off around 3% after the outcome of the FOMC. So this is the key factors that caused the market to have a sharp drop after the FOMC, because previously people are forecasting 4 rate cuts and now only have 2 rate cuts. And what does it mean is, if let's say you have lesser rate cut, it means that the economic growth potentially might be slowing down, or a slower growth in the economy. However, the Fed also projects a stronger economy for 2024 and also 2025. So actually, you may see that these 2 points are contradict, but actually the Fed do see a stronger economy. That's why they want to reduce the rate cut to 2 times. Because if let's say they having a 4 times rate cut and the economy is too strong, then it may cause inflation to rebound further. That's why in this case, Fed actually project a stronger economy in 2025, and they want the inflation under control. That's why they reduce the rate cut from 4 times to 2 times. And they also project that the unemployment likely to remain around 4.2 to 4.3%. And they did also revise up their inflation projection from 2.6% to 2.8% for 2024. And for 2025, they increased their projection of inflation from 2.2 to 2.5%. Hence, the market reacted after digesting all this information, and the sell-off happened immediately right after the FOMC meetings. And what are the key events that are affecting the market this month? First of all will be the December FOMC, like I mentioned earlier. However, there are some positive factors that are affecting the market as well. The latest PCE inflation actually lower than expected. This one helped the market to rebound strongly during last Friday. All right, so with the sell-off coming down and also the major change in the monetary policy from the Fed, so what traders and investors can do? So first of all, traders and investors may monitor the key support levels, and there could be more pullback after the Fed monetary policy shift. However, traders may wait for setup near strong support level. Based on the last Friday price action after the PCE inflation, it looks like the market finds some support near the strong support level. And investor, as a traders, if let's say you have your trading strategy, you should have a list of strong stocks that are hovering near the strong support, or those that are stronger than the overall market performance. And when you see the setup is right, it's actually an opportunity for you to re-enter the market or enter a new trade if let's say the support is holding and the stock you are selecting are stronger than the market. And for investor, For investors, usually you may take this uncertain period to look for stocks that are still providing good valuation. So as an investor, usually when the market is high, you prepare a list of stocks with in line with megatrends or with strong fundamentals, or even with good valuation. You may project their valuation upfront. And when all these uncertainties happen in the market are pulling back, this is the best opportunity for you to look for stock at good valuation at strong support level, or those stocks that are in line with megatrends and now showing good valuation. So all of these are potential opportunity. All these pullback are potential opportunities for you to enter the market for your investment, especially if let's say you have prepared a list of stock upfront with all the valuations value ahead of time. All right, and during this pullback, we also noticed that the Magnificent Seven stocks, which is for example like Apple, Meta, Microsoft, Amazon, Nvidia, Tesla, and also one more I think is Apple, Amazon, Meta, Microsoft, Nvidia, Tesla. All these are Magnificent Seven stocks that are still showing better strength compared to the overall market. So during the rebound also, we do notice that some of these Magnificent Seven stocks are actually rebound more stronger compared to the SPY and also QQQ. So these are the potential stocks that you can monitor, especially the strong reaction of the strong rebound from the Magnificent Seven stocks. All right, so just now among the 6, I missed out one more is Google. So total 7 stocks from the Mag 7 stocks. So these are the stocks that you can monitor further. If let's say you see the criteria that fulfill your investment or trading, you can still trade or invest in these stocks. So you may do your own homework, especially during this uncertain period. I would expect that most traders or investors would have done their homework upfront and take opportunities during this pullback. All right, this is what investors and traders can do, and this is what is the outcome of the FOMC itself. All right, after having go through the market highlight, let's take a look on the stock market performance worldwide. So first of all, we have this Nasdaq 100, which if let's say you invest 10 years ago, it would have now have an average of 50.76% per year. And let's say S&P 500, if you invest 10 years ago, then it would have around 22.4% return average per year. All right, and China, we have China Hang Seng and also FBM KLCI. But let's go through the stock market individually first. So over the 10 years, I would say the best market still the Nasdaq 100 and also S&P 500, because most of our global brands are actually US listed companies. And based on the current market, even though the Nasdaq looks high here, and even the recent pullback, it still looks around at a high level, but Nasdaq 100 still providing a lot of strong fundamental tech stocks, and they still have the most quality companies and also well-run technology companies in this index. And coming on, next one will be S&P 500. So S&P 500 also pulling back recently after the FOMC, and we do notice that Nasdaq 100 actually are stronger. So Nasdaq 100 actually are stronger than S&P 500. So if let's say Nasdaq 100 are stronger, it tells us what it tells us about tech stock. If let's say Nasdaq 100 is stronger than S&P 500, it tells us that people or the overall market are still more favor about tech stock compared to the overall stock market. All right, so the tech stock still is the favorite in the United States, and you may actually take this pullback opportunity to enter some strong tech stocks. If let's say you have prepared your own investment homework upfront, so there's plenty of opportunities going forward if let's say you see more pullback after the Christmas rally. All right, so we do foresee that during this Christmas season, potentially market may rally due to the windows dressing. So you may monitor the stock market first, and after the stock market rally during the Christmas period, you may see if let's say January having some pullback, you may take this opportunity to enter some of these stock near the strong support level. If let's say you have done your homework to prepare all the valuation upfront or the analysis upfront. All right, so this is United States market. We're now at all-time high, even though there's some we are near the all-time high, but even though there's some pullback during the FOMC, I would say this will be a good opportunity for you to enter some of the US stocks near strong support level if let's say you have already done some homework upfront. All right, next one, moving on to China market. So for China market, over the 10 years, it only have a average of 6.75% return. And recently, despite some strong stimulus back in September, the stock market pulled back a lot and now in a consolidation. China market now is in a consolidation, waiting for more follow-up stimulus from the Chinese government, especially from the fiscal policy side, which means the government policies, and also monetary policy side as well from the central bank, from the China central bank as well. And we do see that the China stock market has been quite quiet recently. You can see that it's going sideways in the consolidation. waiting for small stimulus to come in. However, something to take note is that China still in a property crisis, is still having property crisis issues, whereby because of a lot of foreign fund move out, people are losing their jobs, and they do see that some higher unemployment in China, and all of this causing the issues more worse for the property sector, as well as people are finding it hard to service their loan, especially if you are losing your job or your economy are slowing down. And also we do see that because of all these effects, the inflation in China still remain very low, around 0.2%. So if let's say inflation at 0.2%, what does it tell you about the consumer market? So with the inflation of 0.2%, it also tells us that the consumer spending is lower. All right, so consumer spending is lower. So we don't see that the China economy is in a strong recovery yet. And with all these property crises and also all these foreign fund moving out, is a big major problem for the Chinese government or the countries to resolve. So it's not easy to walk out from the slowdown of economy or recession or property crisis in China, but we may want to monitor further in case there is more stimulus coming in that able to stimulate the consumer spending, which means that increase the consumer spending. And also, if let's say the Chinese government able to create more jobs via domestic self-sufficient policies, let's say they manage to like implement some fiscal policy to improve the unemployment status there, then the economy could recover and the stock market could recover as well. So we may want to monitor closely on the stimulus in China as well. For now, it's still on the sideway, and people still expect more stimulus from the government in order to recover from the recession, or in order to recover from the slowdown. All right, this is China, and next one will be Hong Kong. So as we know, Hong Kong market has been relied quite a lot on China economy as well, and they are also one of the financial market that link to worldwide, open to worldwide market. So Hong Kong market has been weak recently because of the China slowdown, and also at the same time with the rate high and all the foreign funds going back to US because of strong dollars, emerging market are also slowing down. As you can see that Hang Seng market has been in a very slow performance over the years, and we do see that if let's say China couldn't recover, or if China continue to slow down, it may affect Hang Seng market as well. All right, so over the 10 years, you can see that overall it has been in a negative region, has been losing 11.91% over the 10 year, and average per year are losing 1.19%. So Hang Seng market, I would say, unless China able to walk out from the slowdown of economy, able to recover from the slowdown in economy, else Hang Seng market likely to be continue to remain slower. All right, and lastly, Malaysian market, FBM KLCI. So how many of you here are invested in FBM KLCI as well? If let's say you're invested in FBM KLCI, you may type me as well in the chat. So as recently, Malaysian market, we can see that there's some in a consolidation as well, slowing down after early of the year rally. So back in first half and second half of 2024, Malaysian market are quite bullish in 2024 because of all these data centers are coming into Malaysia. And also we do see that Singapore want to become one of the top AI nations, and Malaysia actually benefit from it. All right, so from the news itself, you can see time to time there are data center coming into Malaysia to invest. For example, Microsoft, Google, and even Nvidia are investing in Malaysia in terms of data center. And this actually benefited Malaysian stock market as well, because as we know, in order to build data center, you need power utilities, you need water utilities, and also you need a lot of land to build the data center itself. So in Malaysia, we do see that those construction companies, utilities companies has been doing well since early of 2024. And now the stock market in Malaysia is under consolidation, whereby it's moving sideways after all this rally first half of the year. All right, and with the current US market situation where we see that the Fed have a major change in their monetary policy, whereby they're having a lesser rate cut now, only a rate cut of 2 times. And also at the same time, with all these Donald Trump's tariff policies, it caused the US dollar to strengthen further. And with a strong US dollar, usually it will be a slower emerging market. Hence, you may want to monitor key support of the KLCI as well. So if let's say more foreign funds are moving out from Malaysia, then the Malaysia stock market likely could be continuing its sideways trend. So you may need to monitor the foreign funds direction and also check the valuation of the investment counter you are monitoring. All right, but I would say that with the AI trend still ongoing, likely all these are similar AI companies in Malaysia. For example, those are supporting the data center, those providing services or construction to the data center, likely still benefit from all overall mega trend of the data of the AI mega trends. All right, so all of these data center expansion will likely to still ongoing in Malaysia. So this is an overall view about Malaysian market. Okay, after going through all these different stock market, so from the chart here, over the last 10 years, which market are still the best market to invest or trade in? If you compare among the performance over the 10 years, which market still provide you the most consistent return and also provide you the most predictable return? All right, the US market. So why US market? Because US market still have more high growth companies, and also if let's say you take a look on all these strong mega trend growth factors, like for example AI and so on, the leading companies are still from the United States. So from the US stock market, you can also find those companies with high growth and also strong profitability ability. All right, so strong profitability companies and also high growth companies, they are still coming from US. So any one of you heard about some AI or cloud computing companies that are coming from US? You may type in the chat as well. What are the AI companies or cloud computing companies you have heard of before from the United States? All right, any examples of high AI stocks or high growth stocks in the US? Yes, for example, Google, Nvidia, and Microsoft. And all of these companies, despite they already $1 trillion companies, they are still the one that providing more than double digit, I would say at least double digit growth, and also still with a very strong profitability statistics. All right, and another factors will be, other than all these stock market performance, the US having a lot of global brands, strong growth companies, and profitable companies, there are also money on the sidelines. So this is the latest update about money market. So what is a money market? Money market usually works like our FD, like our fixed deposit rate, whereby when the funds are holding cash position, they usually will store their cash in money market to earn interest. Just like when we have additional cash flow, when we have free cash flow, we are either, if let's say we don't want to take the risk asset, don't want to invest in the risk market, usually we will keep our money in fixed deposit. So same for the big funds. All these big funds usually keep their cash in the money market. And now we do see that the total money market funds are now hovering around 6.8 trillion as of July 2024 data. This data usually only provided quarterly by the Fed themselves, so usually it will be quite behind with the latest timeline. So the latest data we have is from July 2024. So we have a record 6.8 trillion in cash in the money market. And part of the reason why investors are stocking up is because they want to take advantage of the current high risk-free rate. Even though now US at 4.5% interest rate, the overall interest rate are still higher than a lot of countries, even higher than Malaysia's 3%. So from here, we can see that a lot of conservative funds actually take advantage of this high risk-free rate and still park their money in the money market. So with the current rate cut cycle, so this 6.8 trillion pile of cash could act as a fuel for the next bull market. But something to be cautious, because the Fed just reduced their projection of 4 rate cuts to 2 rate cuts. Hence, we may see a slower movement. We may see a slower movement from all these conservative funds to the stock market, or the flowing from the asset rotation of the money market to the stock market. It may be slower because of the major Fed changes. All right, so after going through all the facts about the market, let's take a look on what are the opportunities and also risks out there. And usually we'll start with the risk first, because as an investor, we want to be and take aware of our risk first, and also be more conservative, or be more risk awareness about handling or exposing our hard-earned money to the market. Hence, we may want to understand the overall risk in the market first, but it doesn't mean that it's dangerous to invest. It's actually you just take care of the risk. Once you manage your risk properly, it's actually you can be profitable, or you can take a look on the opportunities to invest in the right sector or in the right companies. All right, so let's go through the risk first. So first of all, we may want to continue to monitor the inflation trend. So we do see that there is some rebound in the US region, inflation rebound in the US region, and also Europe region as well. And also at the same time, in China, inflation are slow. It's just 0.2%. So if let's say inflation too high, it also do not good for the economy. But if inflation too low, it also not good for the economy, because it also means that consumer spending are too slow. So usually the major central bank have an inflation target of 2%. And we now do see that in the US it's still around 2.7%, and in the China region is around 0.2%. All right, US is 2.7%. So the average target, or the usual target for the central bank, would be 2%. So we may want to monitor the global inflation trend, whether they are going back to the 2% region. All right, so it means that China may want to recover from the 0.2% to 1%, then 2%. This also shows that, let's say if China able to recover from 0.2 to 2%, it shows that their consumer spending are coming back. Same for the US. if let's say US able to from 2.7% drop further to 2%, it also means that the Fed may cut rate faster because inflation are dropping. All right, so this is something for you to monitor. And at the same time, the US actually projected a higher inflation in 2025. So what does it mean is they do see that a stronger economy in 2025, and also they want to slow down the growth further to control the inflation, to avoid the inflation to continue to going up. This is why the Fed reduced the rate cut frequency from 4 times to 2 times, because they want to control the inflation. All right, and at the same time, we do see a slower global growth as well. So with all these Donald Trump potential tariff policies, it may slow down other countries' economy. And also at the same time, China still in an economy slowdown, or I would say some property crisis. And with the stimulus coming in, we want to monitor whether China able to recover from the economy slowdown over there. All right, because if let's say China is having a recession or in a slowdown mode, economy slowdown mode, then it may affect the rest of the world as well, as we see that China is the number 2 world economy. So if let's say number 2 are slowing down, it could mean also slow down other countries that rely on China, for example, Southeast Asia. All right, so at the same time, we also see that Europe and UK also reporting lower GDP growth. So this also means that European region or the continent in Europe are actually slowing down in terms of economy as well. All right, and we may want to monitor if let's say with all this global slowdown, with all this China slowdown, with all this Europe and UK slowdown, whether in the US there will be a lower earnings forecast or not. So this one unknown yet, but we may want to monitor next quarter. Let's say January, you see earnings season, you may want to monitor whether there's any earnings forecast that are being lowered. So these are the key facts for you to key stats for you to monitor. And also US unemployment likely to remain 4.2 to 4.3%, which means that they do see that a slower job market in the US as well. But with all this slowdown, it's still offset by a stronger US economy. All right, US economy for now, based on the GDP data, they are still the stronger among the nations. All right, they are reporting growth that are higher than Europe and UK, and also at the same time, their growth is their GDP growth is in a healthier status compared to China. Even China at 4 to 5% GDP growth, but they will consider slowdown because in the past 10 years, there has been in a double-digit GDP growth for China. So this means that China are slowing down from a double-digit growth GDP country to now around 4 to 5%. Hence, we may want to monitor if let's say the stimulus actually able to help China recover from their economy slowdown. Because if China able to recover, it's also good for the overall global economy. All right, so next one is the geopolitical tension. So with Donald Trump stepping in, we would expect that he may want to slow down or stop the war in Middle East and also Europe, which is a positive news. So he do mention that during his rally, he mentioned that he'll be able to stop the war within 1 day. So let's see what he can do after his inauguration and after he officially stepped in as a president in the United States. So let's see whether Trump can help on the geopolitical tension. At the same time, potentially after he resolved the war, we may see more tariff and also trade war around the world. All right, so in recent statement, he do mention about he want to tariff Canada, he want to tariff Mexico, he want to tariff Europe, and he want to tariff China as well. All right, all of these tariffs may cause more trade war in the world between countries, and also at the same time, it may cause inflation to rebound in the US. Because tariff usually is inflationary, whatever cost that imposed on the tariff usually will pass back to end consumer or back to the consumer market. Hence, it may cause some inflation rebound in the US and also worldwide. Also, at the same time, with all these tariffs, it may cause supply chain disruption. So, for example, the supply disruption may happen when there's some tariff ongoing because companies may move their supply chain around. All right, so when there's supply chain movement, it may cause some supply disruption as well. So, we may want to monitor any further Trump policies that are going to affect these factors. All right, and next one will be a slower rate cut. So as I mentioned earlier during the first slide, the Fed actually forecast a 2 rate cut instead of 4 in 2025. So this may cause a higher mortgage rate in the US. As we know in the past, the interest rate in the US has been higher. So the highest was around 5%, 5.25% if I not remember wrongly. And now after a series rate cut, it's around 4.5%. And with the projection of 2 rate cut instead of 4, likely the US mortgage rate will remain at the higher level throughout 2025. And this may slow down the home builders or the property market in the US as well. So a slower rate cut may slow down all these construction companies or home builders in the United States. And lastly will be strong dollar. So with the latest Fed monetary policies about lesser rate cut, slower rate cut, and also strong projection of US economy, the dollar likely to remain strong. And also at the same time, with all these tariff potential tariff policies, this may cause the dollar to be stronger as well. And with a strong dollar, it may cause US export to be expensive. So as we know, US mainly rely on export as well. A lot of listed companies actually export their products and also services to the rest of the world. So with the strong dollars, people may look for alternative. Just like Malaysian, let's say if you see a strong dollar and the imported stuff from US are getting more expensive, you may seek for alternative from other countries, for example, either from China or from Europe, all right, for technology products. So this may cause consumer to switch from US products in overseas to other nations similar product overseas, and it may cause some sales drop from some of these US company. And also at the same time, if let's say you are listed in US, let's say you are US companies, if let's say you are listed in US, all your foreign revenue need to report in US dollars. And with the strong dollar, your foreign revenue may become worth lesser when it convert to US dollar. All right, so this may cause the revenue to slightly drop, especially let's say you are a company that strongly rely on foreign revenue. So all of this may cause some effect in the stock market. So we may want to focus more on those companies that rely less on foreign revenue. All right, but having said that, all these risks are here for us to evaluate and plan our risk management. But there are still plenty of opportunities in the stock market. Even though we see a list of risks like this, let's take a look on the opportunities and see what is the right sector or what is the right industry we can focus on despite all these risks around. All right, so first of all, investors or traders can focus on industries that are in line with the key themes. For example, what are the key themes? One of them is mega trends. All right, with all these AI mega trend, cloud computing mega trends, big data, fintech, all this likely to continue to grow despite we see a slower global economic growth, because as you can see, AI actually is something a future trend. All right, so nowadays you can see that we can actually improve our productivity via AI tools, and also we can see that the AI server or the AI data center will continue to grow as we see more and more users are using AI services or AI features. All right, and same time with all this AI trend, more and more data will be go into the server or go into the cloud. So cloud computing likely to continue to expand as well. And with all these electronics revolution going on, AI, smart gadgets, smartphone, and so on, so we do see that more and more data will be available for analysis. So big data also is a major mega trend. For example, the data center that store all these data may be likely continue to be growing. And lastly will be fintech as well. So with all these cashless payment, all these new technologies coming out in the payment industries, fintech likely to continue to thrive and grow under the slower global economy as well. So if you focus on the right stocks from the right mega trends, likely will be an opportunity for you. If you see any major pullback, likely there will be an opportunity for you to enter all these good stocks in all these in line with all these mega trends. All right, so other than mega trends, another key theme will be upgrade cycle. So we do see that with the AI transition ongoing, so more and more AI-driven products will be launched to the market. For example, nowadays you may see AI laptop, AI computer, AI smartwatch, or even like AI tablets, whatever electronics equipment, nowadays you see some AI function there. So all of this may spark another round of upgrade cycle. And we do see that also there will be PC market, likely will be a PC market recovery in 2025 year end. All right, so this one is digested from one of the Semicon earnings report recently, whereby in the past, we do cover the PC market upgrade cycle as well back in 2020. During COVID time, a lot of people actually upgraded their laptops and also desktops. And usually the PC upgrade cycle will take around 4 to 5 years, And now is the time to due for upgrades. But because of economic slowdown and also global slowdown and so on, people are delaying their upgrade. However, during one of the electronics companies or semicon companies earnings report, they do mention about a new generation AI PC, whereby nowadays the minimum RAM for the computer will be 16 gig onwards. So this means that potentially more demand in the RAM market, and also at the same time, they do see that the PC market may recover in 2025 year end because of the end of life of Windows 10. So with the end of life of Windows 10, corporate tends to upgrade to Windows 11, and when you upgrade to Windows 11, you may need more powerful laptop for some of the very old laptops. So all of these will be a catalyst for PC market recovery in second half of 2025. And other than that, sectors that are benefit from Trump's potential policies might be an sector to focus as well. So as we know, Trump have a lot of policies or in mind. So he want to tariff certain nation, he want to deport some of the foreigners, and also at the same time, he want to make America great again. All right, so we may want to monitor his policies from time to time and see that which sectors likely to benefit from them. And if you get the right sector to invest in or trade in, it will increase your success rate as well as an investor or traders. And next one will be companies that are less affected by tariff. So what I meant by this will be the local US company, domestic company in US. For example, those companies that having their revenue rely on US itself. All right, not much foreign revenue or not much rely on foreign revenue or foreign imports and so on. So you may focus on domestic US companies that are collecting their revenue mainly from the US itself. So these companies likely to be less affected by all these tariffs. So you may continue to monitor further. Or even you can find some companies that are likely to benefit from the tariff itself. You may also trade those companies. All right, and lastly will be last opportunities, or the last point for opportunities side will be companies that are less sensitive to high interest rate. So what I meant by this will be companies with low debt. So if let's say you having a low debt company or you are a net cash companies, then you are likely to less affected by all these high interest rate. Because as we know, if let's say you have more loans, if you have more loans, means that you need to pay more interest if let's say interest rate are going up and up or stay at a high level. All right, now we are at a rate lesser rate cut cycle. So if let's say the rate hike prolong, you may need to pay more interest. So you may select when you select stock, you may consider from this point for this point. For example, you want to consider those companies with low debt or even net cash. And another point will be you want to select those companies that are selling products that are not rely on loans. For example, let's say those companies that are selling home or buildings. Those products may need loan for you to purchase the product. Those companies selling this product may need consumer to take up loans or business to take up loans in order to purchase this product. Those high leverage products like home, houses, and also offices or buildings, or even car. So all these companies that are selling these products likely to be slower because of high interest rate. Consumer may not willing to take up too much loan for now. So all these companies might be slower. So you may want to skip those companies and focus those companies that are less sensitive to interest rate or high interest rates. All right, so with all these risks around, I would say opportunities still plenty. You just need to do your homework and get ready. And when the market corrects further, then it's the best time for you to actually evaluate your investment opportunity or look for opportunity to enter for your investment or trading. So usually I would say get yourself prepared upfront first, and where there's an opportunity, it's the best time for you to go in. All right, or go in or start to take action. All right, so but while waiting, it's best time for you to prepare yourself with the right knowledge, and when times are right or the setup are right, then it's the best opportunity for you. All right, so with all this outlook I have, so in 2025, 18 January, we actually have an symposium for you guys. So if let's say you're interested in navigating the mega trend, or you want to have some some information about our market outlook, or you want to hear from some industry experts, where we were inviting some of the industry experts from all these mega trends companies to come and provide you some insights during our symposium, you may join us in this upcoming 18 January 2025 in Nexus Bangsa South. All right, currently we have a 20% discount for standard tickets for a limited time. So if you are interested in this symposium, you may click on the link in the chat now to find out further. All right, so with that, that's coming towards the end for my market update. I'll now open the floor for some Q&A. All right, so I see a question about quantum computing. All right, so how many of you heard of quantum computing from Google nowadays, or the last few weeks? Yeah, quantum computing actually is a second milestone from Google. They're actually having, I think the milestone have five. They have 5 milestones in their quantum computing roadmap, and it's still at number 2. And I would say now quantum computing are still slower, still slow and not practical yet. Not in the application phase yet. It's still in the experimental stage. So even though it's very strong, very good, but a lot of quantum computing research are still ongoing. And I would say it's still in the early stage for quantum computing. I see next question will be most of the time US market just pull back only one day but keep trending up. How to find opportunity to enter? All right, so yeah, usually it won't be one day, but you can see that recently it has been pulled back. But I would say now we are not out of the woods yet. It's still finding the support, even though last 2 days we see some rebound. All right, so but usually if you invest in US stock market, I would say usually when you see the market is high, you want to prepare all these stocks upfront. You may want to consider that, okay, so what are the sectors or industry you want to focus on for your investment? And also at the same time, what are the major opportunities, or like for example, the megatrend I mentioned about, or for example, the PC market recovery theme I mentioned about. So you may want to find out all these stocks upfront, have a watch list with you, and focus on those companies that are profitable. Profitable means they have a high ROE, for example, having a high ROE company, high profitability companies, or you want to focus on some of them that are having high growth under the right mega trend. So when there's a pullback in the market, let's say you see, for example, like the FOMC back then in Wednesday, then you may want to monitor those stocks where they are pulling back to. For example, if let's say they pull back to a level that are having a fair valuation for you, then you may consider whether this is the right place for you to re-enter, and you may do some stagger entry. It means buy partial and partial and partial. All right, so usually for our students, we have a process map for them, and you may find where is the right place for you to plan your trading plan or investment plan. And as the opportunity arises, you may start to buy partial in or stagger entry into the position. So we have a process map for each of our trading style or also investment styles to guide you on how to prepare upfront, so you can plan ahead of time and do your homework ahead of time, identify all these valuations, and then you just enter according to the plan. Right, so hope that you can find opportunity in the market with that preparation upfront. So next question will be tax implication in investing in US market. In the absence of filing tax return, we just pay withholding tax. All right, so for now, based on my understanding, in Malaysia we don't have much tax treaty with the US. Whatever dividend you are collecting already with the withholding tax in the US, and for the capital gain tax, for now we don't see there is changes for now. All right, so our staff has just posted in the chat itself about the tax policy in Malaysia, which is a long list of word. You can read that for yourself, consider that for yourself. But for now, I would say investing wise, capital gain, for now I don't aware of any potential tax you need to file. All right, so another last question will be, is consumer retails like Walmart and Nike consider good counters during this interest rate cut? All right, very good questions. I would say that, for example, you may want to group these Walmart and Nike into categories, even though they are from the consumer market segment. For example, Walmart are more towards consumer staples, and for Nike, more towards for consumer discretionary. All right, so you may want to see under the interest rate slower rate cut backdrop. So which one likely to be benefit? Is consumer staples likely to be benefit, or Nike is better? All right, so for Nike, I would say the company itself having some headwinds. They have been slowed down in the China market, which is one of their main growth revenue are coming from. So with the slowdown in China, Nike actually are not doing well over the past years. All right, and also we do see more and more competitor in the sports shoe segment for Nike, or jogging shoe segment for Nike. So they are having more headwinds for Nike. All right, so this is about Nike. And Walmart and Costco actually is still resilient. They has been rely on a lot of domestic revenue. For example, Costco, Walmart, most of their revenue are coming from US itself, but they might be affected by the tariff itself because of their imports from China. So if you want to do a further detailed study into Walmart and also Costco, see how much they rely on imports from China, and whether this actually reflected in the stock price, or they are actually, or their management actually doing a lot of mitigation to reduce the effect of tariff in case, let's say, there's a lot of tariff in China goods. All right, and with the strong US dollar, likely it may affect all these, may offset all these tariff effects because of the strong dollar. All right, and maybe I take one more last question is, what is the possibility of market pullback in January and before and after Trump inauguration? All right, so I don't have crystal ball with me what will happen in the future. I couldn't predict the future, but usually the stock market will have some Santa rally in end of year. Likely there will be a windows dressing happening over these few days. And once the holidays is over, when early January, you may want to monitor if there is a continuation as well, because January usually is earning season. All right, usually January is an earning season. So stock market potentially may still have some strength or to rally because of, if let's say you see strong earnings, then it may have a continuation. However, if you see weakening earnings or slower forecast in terms of earnings, then it could be a sign of potential pullback in the stock market as well. So generally, I would say the critical month after the Christmas rally, you may want to monitor January whether during the earnings season, any company like reporting slower earnings, any key companies in the US that are reporting slower earnings. For example, let's say Apple earnings, let's say Nvidia earnings, or even like other semiconductor companies or tech companies that are reporting slower earnings or lower their forecast and so on. But if let's say they're still reporting good earnings, typical seasonal pattern, January still a bullish month as well. All right, and before and after Trump inauguration, so this one highly dependent on what policies he is talking about. So if let's say he mentioned more and more about tariff and other policies, it may affect those companies that are rely on foreign revenue, or those companies that are rely on China. So this may be affected. So for example, one of the observation we see is that after Trump's election, semiconductor industry actually are slowing down, has been going into sideways consolidation because of the tariff uncertainties. So this is some of the action or some of the factors that you can consider when you're planning your investment and also trades. All right, so with that, we are already finished our counter and we are now at 1:15 p.m. We have been overrun by 15 minutes again. All right, so hopefully, I hope that you guys are benefiting from this market update. And if you find this market update is benefiting to you, you may also introduce it to your friend. All right, we'll do this monthly. And with that, we're coming towards the end for my market update. And I wish everyone have a Merry Christmas and a Happy New Year. And wish you all trade well and prosperous coming years in the financial market.